It's Thursday, November 15th. Welcome to Market Foolery. I'm Matt Greer, and joining me in studio, we have Motley Fool analysts Ron Gross and Andy Cross. Gentlemen, how are we doing?
Fellas,
how you doing, Mac?
I'm doing great.
I'm doing good. We've got sleet. We've got snow.
Yeah, snow, Mac. We'll say it was
sleet.
sleet. Yeah, but let's focus on the snow. It's that time of year, man.
6 a.m., it was sleet.
Yeah.
I went out, got the newspaper. Yes, I still,
That's
old
awesome.
school, read the newspaper, and it was sleeting.
School's closed in Montgomery County, Maryland. Yep. Why, you ask? I don't know.
Well, it's sleeting and
All right,
snowing.
a little bit of sleep.
It was slippery.
No, in the mean streets of North Arlington, schools did not close. They stayed open.
It's rough and tumble.
We're gritty. We're gritty, Ron.
Yeah.
Okay, well, we've got lots to talk about here. We're going to talk some Warren Buffett, and we're going to talk some Levi's. And I am going to ask you guys to share your jeans wearing history. So that's just, a little catnip for people to look forward to. But let's start with Walmart. Stronger than expected earnings, 11 straight quarters of sales growth now, Andy. E-commerce sales up 43%, and Walmart raised full-year guidance. So that all sounds great. And then I go and I quote the stock, and shares are down.
Yeah, Mac. I mean, of course, one day the stock price can move on a lot of reasons, but like the story here with Walmart, as we talked about last quarter, is really the e-commerce, just the chains that they are really trying to push ahead. And just even the commentary, there's so much conversation about the investments they are making in more sophisticated distribution warehouses, online grocery delivery, grocery pickup is a big push for them. So the e-commerce business, Mac, like you said, up 43% this quarter. That's an improvement of 40% last quarter, 33% increase the quarter before that, and 23% 4 quarters ago. So just a year-on-year improvement and the continuing of the trend on the e-commerce sales for Walmart continues to be impressive. The stock reaction today, I think there was probably like, it's still kind of a slow, kind of growing. Like sales are up 1.4%, 2.4% if you back out some of the currency. So maybe not quite so exciting, but really, if for such a large company, they continue to make these investments to try to move the needle and obviously compete against Amazon.
Yeah, a lot of good things to focus on in this report. I think the curmudgeonly traders out there today are probably focusing on margins that got hit a little bit due to higher transportation costs, rising e-commerce fulfillment costs, which they actually, that's a good thing because that means they're growing their e-commerce business. But nevertheless, it does come with higher costs. Profits actually down 2%. So it's hard to get excited about a report where profits are down from the previous period last year. So I think that's probably what folks are focusing on, but I do like the raised guidance. I think that makes sense. The stock has been all over the place this year from February through August. It was a woof, as you like to say.
Woof.
But it's come back since then, probably kind of flat year to date. So nothing really exciting coming from the stock. I like the raised guidance, only 21 times earnings right here. For a company that will probably grow in the low single digits. We'll see how that e-commerce continues to ramp.
Well, and they also closed the Flipkart acquisition, which is the Indian business, which they competed a lot for. And that's expensive, and that added to the debt pile for what they have. But that's an exciting investment to make. So they are definitely not standing still. Certainly not the Walmart story of even 5 years ago with the investments they're making, and they have to because there's so much more of a competitive space with free shipping from the likes of Amazon and others who are not standing still. So you have a company that's going to generate $15 billion or so in free cash flow. They're going to basically, spend that all in dividends and share buybacks. So it's really a return of capital kind of story for investors. The stocks reacted very nicely off the lows here earlier this year. At $100, it sells about 21 times earnings, a slight premium to the market when you look at forward earnings. So probably not a ton to get excited about in the stock price. But from the business side, they're making the investments that are important to make.
And not curmudgeonly, right? You don't have to be curmudgeonly about it, huh?
No, I don't think so.
Years ago, we used to talk about how they've got to right-size the U.S. business. The U.S. business is everything we talked about. Now they've got it humming along. International, though, isn't where they would want to be. Andy mentioned the Flipkart acquisition, which I think is a really interesting one. Unfortunately, the CEO of that business unit had to resign following an allegation of sexual assault. So obviously, That kind of throws a little bit monkey wrench into some works. They had to shed control of their Brazil operations. They merged their UK operations with a rival to focus on the US business and their e-commerce business. So international kind of floundering. They need to figure that out next, I think.
Just on the U.S. side, the comp growth of 3.4%, that's a 1.2% increase in traffic. So more people coming into the stores, but a 2.2% increase on the average ticket price. So they actually are seeing a little bit of benefits, and that's a little bit higher than inflation. So they actually are seeing some benefits from some of the pricing mechanisms that they're putting forward, and that's an increase off of the 1.2% from last quarter. So they are actually seeing some pricing benefits, which you don't really particularly expect to see that from Walmart in this kind of environment.
And along those lines, let's talk about two areas of the business that really appear to be growing. Toys, so benefiting from the Toys R Us bankruptcy, and groceries. By the end of the year, Walmart expects to be able to deliver groceries to 40% of the U.S. population.
I guess if you look at my household, groceries and toys are a pretty good spot to focus in with two young kids. And that's, bread and butter, trying to serve the customer base that Walmart wants to serve in ways that are more convenient. That's, as Ron mentioned, their investments in that. The new distribution center they've been working on in California will allow them to ship product goods that are 40% at a 40% faster rate than their traditional distribution centers. So a lot of investments, a lot of robotic investments going into the distribution center. So Amazon's done this so well. Walmart now playing catch up. The groceries, we all buy groceries. I mean, I eat every day, Mac. So I've seen you eat pretty much almost every day.
Pretty.
Certainly, Ron.
It is not pretty.
It may not be pretty.
I don't like to miss a meal.
But we all depend on food, and so it's a good spot for them to focus on and trying to now meet the customers where they want to be met.
I love this quote. CEO McMillan said, Walmart can offer fresh food within 10 miles of 90% of the U.S. population. That's pretty powerful.
And you're still curmudgeonly, or are you coming off that?
No, it's not good. This company and this stock is not going to knock the cover off the ball. But from a total return perspective, as part of your more conservative portion of your portfolio, I got no problem with it.
2% dividend yield. I mean, it's not. Don't expect fireworks, but certainly over the last couple of months, it's been a nice performer for people who've held on.
Okay, well, speaking of nice performers, there's a guy named Warren Buffett who's got a pretty good track record, is my understanding, as an investor.
Done fine.
And his company, Berkshire Hathaway, just reported its third quarter holdings, and boy, does Buffett or someone over at Berkshire really like banks. Guys, let me just give you the 10 holdings quickly and see if you notice a theme here. Apple, this is the biggest holding. Then we've got Bank of America, Wells Fargo, Coke, Kraft Heinz, American Express, U.S. Bancorp, Moody's, Goldman Sachs, and J.P. Morgan Chase. 5 of the 10 are banks.
You look at this portfolio and you say, a bunch of banks and some bunch of consumer staple-ish stocks. It doesn't seem to be a very exciting portfolio.
The curmudgeonly trader. There you go again.
But Mr. Buffett does know what he's doing. When I think of Buffett, I think of kind of that folksy guy who sees candy kind of businesses, old economy types of businesses. But we forget he is a student of financials, whether it be insurance or financial services or the big banks. You'll remember long ago he was actually interim chairman of Salomon Brothers, and subsequent in various kind of financial crises, he's helped bail out more than one large bank. So he understands these companies where I will say I tend to not, because they seem like a black box to me, but he clearly does. And I think that makes him comfortable investing, big portions of his portfolio, especially in this type of environment where interest rates are going to start to rise. And I think he probably, less regulation. He sees some good stuff on the horizon, and knowing what he knows about how these banks run, he's comfortable.
Yeah.
So does this get you more interested in banks, Ron?
No.
Yeah, I mean, Warren Buffett has insights into, like Ron was saying, the financial world from his 60 years of investing in all types of businesses. He also has the Todd and Ted partnership helping him out in the investing landscape as well. So, but you look through his portfolio, you do see companies like the airline investments they've made over the last year or so, combined with a lot of financials. The financial investment doesn't really surprise me. Ron mentioned the rising interest rates. They are getting from a scale perspective, from a competitive position, the largest banks continue to kind of widen those moats. Frankly, Mr. Buffett is not one that's going to pay 10 times revenues per se for, software as a service companies. And he has a lot of capital to put to work. They have $100 billion of cash on the balance sheet, but they generate so much cash from their operating businesses to be able to invest. So making investments like this, including Oracle, which they bought last quarter as well too. So, these are the kind of investments you expect to see from Berkshire Hathaway, and given the size of the organization and the amount of capital they generate, and just their traditional valuation bent and thinking, these don't really surprise me from these investments. He knows them well.
Yeah, and it is good to see the Ted and Todd influence. I think Buffett was notorious for staying away from tech, and he said it was because he couldn't understand it. It's not really about not understanding. It's about not being able to predict the future, which I completely understand. But it's nice to at least see him in consumer electronics like Apple, Oracle, a business where either he or Ted or Todd can understand. We saw recent investments in fintech, financial technology companies, which good to see, because clearly that's going to be a big place to put capital for the future. So I like to see some of that in addition to kind of the old Kraft, Coke, Amex kind of stocks that he's owned forever.
Yeah, and by the way, let's not forget, he's also buying his own stock.
That's great.
I mean, they bought almost $1 billion worth of Berkshire Hathaway stock over the last quarter. I mean, that's significant, because he doesn't really go out there and aggressively buy those stocks. And he said changed his methodology for thinking about when to buy that stock from a price to book value target to when we think the stock is undervalued, and they bought a bunch last quarter.
Yeah, well, I will be curious to see if he starts buying even more Apple, because for perspective here, Apple, his largest position by far, almost $57 billion worth of Apple stock. Bank of America, around $25 billion, Wells Fargo, $23 billion. So Apple, far and away.
I would imagine with the Apple weakness that we've seen lately, he is in the market buying more. That's just a guess. I don't think he gets hung up as much as traditional Wall Street does on kind of these kind of quarter to quarter iPhone unit sales numbers. I think he's thinking longer term about what Apple will do in terms of generating cash flow and buying back stock over the next 5 or 10 years. So I would imagine he's increasing his position on this weakness.
So if I'm an investor and I hear about these 10 holdings and I'm like, you know what? Buffett's had an incredible track record, one of the most successful public market investors in history. Why not just mimic this portfolio? Why not just go out and buy these 10 stocks?
I think you would be better off buying Berkshire Hathaway almost than
you could mimic these stocks, but then what? Because he's constantly changing the portfolio, adding to other companies. But more important, you're getting all the operating businesses of Berkshire Hathaway, which are generating all those millions and millions, billions of dollars of cash flow. The Geico generating the float capital, which he then can invest in stocks. So if just buying these publicly traded companies, you would not be getting all those operating businesses as well.
No, I think if you want to go investing in some of these businesses, they can be fine investments. But considering he was buying his own stock and he's pretty particular about when they buy that stock, I think Berkshire Hathaway is one of my largest personal positions.
Me too.
And I just think that's probably continuing. I think the stock is undervalued now. So if you wanted to put your money behind Mr. Buffett and that team, especially with the insurance operations that Ron mentioned and the operating businesses, buy Berkshire Hathaway.
Okay, guys, our final story, one that is near and dear to my heart. We're going to talk Levi's. We're going to talk denim. We're going to talk jeans. Now, they're getting ready to open this massive flagship store in Times Square. It'll be their largest store in the world. But that's not why we're talking about Levi's. We're talking about Levi's because, according to reports, they are talking about going public again. And I say again because Levi's was a public company from 1971 to 1985. So does a Levi's IPO have us excited?
an iconic American brand for sure. They're trying to raise 600 to 800 million, a valuation of around 5 billion. It looks like. I don't know if it gets me excited from a stock perspective. I have to see what kind of valuation this looks like relative to cash flow and earnings. I don't know what growth potential looks like, whether this is an international play or a retail play. Obviously, they have their own stores, almost 3,000 of them, but they sell into 50,000 retail locations around the world. Levi's, Dockers, Denizen brands. I'll keep an eye on it. It's not some hot tech IPO, that's for sure. But I've never been a hot tech IPO investor anyway. So.
And apparently, Ron, we were talking about this before. Apparently, Levi's T-shirts are all the rage these days. Yeah. Who knew?
Who knew? I'm telling you, iconic. It's an iconic American brand.
And did you ever wear Dockers?
Yeah. If you're do only old men wear Dockers is my question.
Only with pleats.
Because then I'll answer your question.
I wore pleats for like 10 years too long. Yeah. And finally, I had a group of friends. It was like an intervention. And they basically said, you got to quit wearing pleated pants. Yeah. And no one had told me. And apparently the braided belt, that went out.
That went out too. Did you wear the stretch waistband Dockers or just the straight up Dockers?
No, straight up Dockers. But they were like pleated and it was a bad look. Yeah. And someone should have just pulled me aside. I mean, sometimes tough love is the
Don't
best
throw
love.
out that braided belt. That'll come back.
Oh my gosh. I'm banking on it. Andy, what do you think of Levi's?
Well, I was saying it looks like Ron was saying it's not some, even though it's headquartered in San Francisco, not some, high tech investment. It's not. It'll probably be priced around 1x sales. It looks profitable. It looks like it's growing nicely. It has been a resurgence here, along with the kind of Ron was saying, the iconic brand, the Americana. So there's enough to get me kind of excited. But the business in general is proven to be quite tough over the years, and I mean, Gap struggled, and we just know what the retail channels are looking like with them. More and more of their business might be tied to their own distribution rather than dependent on the likes of the other storefronts, particularly those that are tied more to malls, which traffic is down there. So will be interesting to see how they use their brand and how that translates to a new buying experience compared to where it was, the last time it went through the public markets, which is, of course, a much different marketplace now.
I'd be curious why they need 600 to 800 million of capital. Is somebody trying to cash out of this business? Do they need that capital because of some growth strategy? I need to see kind of their projected use of funds.
Yeah, and how much the family still owns may be tied to it. So it is interesting the why now. Like what is it right now? Are they really trying to push a growth story that they can't fund internally with their own capital? Why offer shares versus taking on more debt, which is pretty cheap right now? So it might be a liquidity event from a core group of shareholders.
And the business is 165 years old. That's
pretty cool. Amazing.
Yeah, that is very, very cool. And here's another fun fact. So if you're out and about and there's a lull in the conversation, okay, worldwide denim market, 95.5 billion. How much of that does Levi's have, according to 2017 figures?
15%.
Andy?
I'll say a little bit less than that. I'll say 10.
5.3%.
Interesting.
So, I mean, there's a lot of upside if you think denim is going to be around for a while.
Kids do not wear jeans anymore.
That's true.
Male children. The girls still wear them, but there is no jean market right now for kids. So that might be an opportunity, or it might be a red flag.
Right? Yeah, that's such a good point. My boys will not wear jeans; they wear athleisure wear, and it's just. And I know that isn't it Under Armour that hates that term?
I guess
athleisure wear, but that's what it is.
It's
Lululemon, but that's what it is. It's like athleisure. It's something that I'm going to be wearing in 20 years when I drive a golf cart.
That sounds awesome. Sign me up.
Okay, so as we wrap up, I've got to ask. We talked Dockers earlier.
Yeah.
Let's briefly belly up to the bar here and talk about our jean wearing history. Andy Cross, just give me the overview.
Yeah, well, so I've gone through Wranglers, I've gone through Lee's. I never was like the super. Of course, I'm not now a super fashion person, but I did have a little bit of one embarrassing jean moment. We were at a Motley Fool board of directors, and Tom Gardner was trying to get us all a bond and was talking about an embarrassing story, and I mentioned one thing that I just kind of like to do when I try on jeans is to back when I used to go to the store, try them on, and kind of turn around and check out how my backside looks in the mirror.
You're talking the board.
So I mentioned this to the board of directors, like when I go trying jeans years ago, and it got a really good laugh. But that was I wish I had that story back from the board of
True
directors.
confessions.
It was a true confessions, but yeah, I have a pair of Levi's on right now, and that's kind of a standard go-to. They're affordable, and they've opened up their lots of different types of styles that match what I want. So,
Ron?
The jeans I am currently wearing as we speak are 9 years old and from the Gap, and I'm sure they're not in style anymore. But I wouldn't
Were they ever?
I wouldn't. Yeah, I don't know. Is the Gap ever? I wouldn't even know how to tell.
And what would you say was your most stylish jeans? If we go back, if we get in the Wayback Machine.
So I don't know how much of our audience remembers Jordache or even Sassoon jeans.
Wow.
But in 6th grade, I had a brand spanking new pair of Jordache that I refused to wear because they were designer and tight and ridiculous. But yet I found myself having to throw them on to attend a band concert that the parents all attended in our 6th grade auditorium. And it was, I remember it to this day. I'm sure I dream about it consistently because it was just so embarrassing and traumatic.
So, and how'd that work out for you in hindsight?
It was embarrassing and traumatic.
Okay.
You guys ever go the Mavi route? I did Mavis for a while.
What is that?
Mavi's is a brand. They're still around. You can still buy them on Zappos and Amazon. And
Lucky makes a nice pair of
Lucky,
jeans.
yeah.
I'm surprised
Lucky
neither
from
of you.
Nord- from
I'm surprised
Nordstrom.
neither of you mentioned Toughskins because I would rock the Toughskins in elementary school.
Toughskin, that's
Yeah,
fantastic.
and then I kind
Aren't
of
they for husky children?
yeah.
Well, there you go. The shoe fit, the jean fits.
I was not husky, and then I went through kind of a dark period in college where I wore Wranglers with Stan Smith tennis shoes, which is a terrible look. If you're going to wear Wranglers, you have to wear boots, and I think technically you probably have to like dip or chew, and I didn't do any of that.
Are you wearing Kirkland jeans right now?
Well,
Costco?
I've gotten religion, and I was wearing Kirkland for a while, and then I realized, you know what? And I love Costco. You know, I love Costco.
Yeah, we know.
But Kirkland is just, I feel like you've just given up.
Yeah.
And so I finally said, you know what? I'm going to go back to Levi's. Now I'm wearing Levi's 501s.
They look amazing.
501.
I'm happy as a clam, but I'm not turning around. I don't do that. I just put them on, and there you go.
You know that strip that is along the leg that says what size they are?
Oh, yeah.
The adhesive strip. I once went to a party forgetting to remove that adhesive strip. And I got there, and luckily it was friends who pointed it out. But before they told me, they took a picture of it. It was me. I was wearing like a blazer jeans and the adhesive strips, like, whatever size they were.
See, I think that means you're just incredibly secure. And
I
you're
didn't
so
check myself out in the mirror
that
before.
you're so confident that you're like, this is how I roll. Then again,
It's there on purpose.
Then again, I didn't get married till I was 40, so you got to consider the source.
You're no source. Yeah.
Okay.
Acid wash? Guys go the acid wash
Oh
route?
yeah,
I
did
love
that.
the
Yeah.
acid wash.
Acid
for a
wash.
I was
small
more
period of time.
stonewash. I was more
Stonewash,
stonewash, but you like acid wash.
Good
It
acid
works
wash.
for me
He's
for
from
a good
like,
2
yeah,
days.
he
I'm
like-
from New York.
Yeah, New York
that's
and
how
Jersey.
they do it.
Bon Jovi, full on Bon Jovi.
Good times.
Okay, so the Desert Island poll, it's a little tricky this time. I think I know where you're going with this, but if you had to invest in one of these companies that we've talked about, you're on a desert island for the next 5 years, and I should preface this by saying, don't invest this way. It's just a fun game. Walmart, Berkshire Hathaway, or the soon-to-be, maybe, Levi's IPO.
Dandy.
Berkshire?
Yeah, I got to go Berkshire on that.
Okay.
No brainer. Again, one of our, I think it's my biggest holding actually. And I'm a proud shareholder.
Okay, well, there you go. Andy Cross, Ron Gross, thanks for joining me.
Thanks,
man.
fellas.
Marketfoolery@fool.com is our email. If you have any questions or comments, or if you just want to talk about your jeans history, we would love to hear it. As always, people on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. I'm Matt Greer, and for the Jordache wearing Ron Gross, and for the Andy, you just,
He can wear anything.
you can wear anything. Yeah, for the very fashionable Andy Cross. The show is mixed by Austin Morgan. I'm Matt Greer. Thanks for listening, and we will see you tomorrow.